Good afternoon, good morning, good evening, everyone. Yet again, I restarted my computer and the voice modulation software made me sound like a chipmunk. So yesterday's recordings were no good, which is unfortunate because on the cryptocurrency session I'm doing right now, I talked about how we should be expecting, really, I've been talking about this last couple of weeks, discussing the likelihood that we will see a corrective move occur here in cryptocurrencies because everything is really overdone. My article yesterday, I did indicate some areas to look at for shorting this market. And then if you look back to an earlier article this week, I also look at some areas for some buy limit orders to add. So, if we go through the list here, really, I'm just sitting on my hands because I want to see how things play out. Also, in financial analysis, when we analyze cyclical trends, seasonal trends, and there's a lot of different types of trends. There's secular trends, which are basically just in the stock market. Secular trends are a broad definition of basically you have industries or sectors which are doing something different than the aggregate market. But what's going to be really interesting is there are markets that lead other markets. There are markets that move before other markets that kind of give you a heads up. Like, for instance, I believe the TSX, the Toronto Stock Exchange, moves before the U.S. markets. But one thing I'm really wanting to pay attention to here is cryptocurrency markets, because they are such a risk-on asset still, will moves in cryptocurrencies, will they kind of predict, or will they set the stage for what happens with other risk on instruments like the stock market? So if we do see a broad retracement across the entire market over the weekend, will that translate to the stock market finding weakness next week? We'll have to see. Looking at Cardano right now, on the hourly chart, we were down more than 5%. We were down about 6% at one point. If we want to measure that, the open was roughly there. And actually, we were down 12.25% actually, which is a nice move. Bitcoin, it's got a lot of strength behind it still. But there are no real major individuals or institutions that really want to participate up here. We're seeing the volume really drop a lot as we've gone higher, which is normal. And we're seeing this trend here. I've talked about this before, how the volume has decreased in Bitcoin, at least on Coinbase. We're seeing kind of an overall average of it drop down, get lower. Ethereum, same story. We're seeing decreased volume as prices go up. Volume precedes price. It's one of the maxims of technical analysis. We say volume precedes price because as volume goes down, if prices are going up and volume goes down, then we expect to see prices go down soon. It kind of turns, this is known as a divergence. You have an appreciating market and a healthy market, a bull market, when you have equal volume or rising volume as prices accelerate higher. You have a divergence in that market when you see volume dropping off but prices continue to go up. This is also something that's occurring within the stock market, where we have seen over the last couple weeks big drops in overall volume, but we're continuing to see prices go higher in the indexes. So there's a inherent weakness there. Also want to point out that on the COT report, so this was last week's, but let's look at the one from last week. There were 1,000 long positions shaved off and short positions shaved off, but otherwise, institutions, non-commercials were net short by about 60% to 40%. I don't know how bad some of these guys got hurt, but yeah, it's pretty painful. But here, look at what's over here, non-reportable. These are the retail traders who get burned. They are 82.5% long versus 17.5% short. That's a discrepancy. So people on the long side of the market, retail traders, if prices go down, who gets hurt the most? Those who are long the market. So that was last Friday's, which was basically telling us where positions were the Tuesday of the 2nd, so the 5th reports. And then we got yesterday's report, which was on Friday the 12th, and we look at the data of what was going on in the market on Tuesday, and we see that there were an equal amount of longs and shorts added. But we had like 3 times as many longs added for retail traders as we did for the short side. So there were some shorts added, but we're still very much overbalanced to the long side of the market versus the short side of the market. So if prices go down, expect to see a lot of retail traders get burned, especially if it happens over the weekend, because these are recording futures data. So the futures markets, the Chicago Mercantile Exchange, that's what this is measuring. And those markets are closed over the weekend. They don't open up till a Sunday like the other commodity markets and currency markets. So if there is a big drop in Bitcoin's price over the weekend, a lot of these people are going to be burned pretty hard. So watch out for that. Otherwise, sitting on my hands, hopefully sometime next week we'll find some good opportunities to either continue to short the market down lower on any dead cat bounces, or we may find some opportunities to add to long positions if there's a deep enough retracement. But we'll go over those more on Monday. From all of us here at Exchange Rates UK TV, thank you all for watching, and I look forward to speaking with you all next week. Don't forget to like and subscribe.